Hello everyone, it's Alex Suslov, Head of Capital Markets at ADM Mortgage, and Billy Abrams, CEO of ADM Securities. We're here with you for our AD Weekly Digest. Hello Billy, how are you?
Everybody, hello Alex.
Billy, it was another fun week. We had CPI numbers came higher than expected. I saw the market has reacted in the morning and then rolled back again. Then the next day, yields went up once again. So market is feeling a little shaky, and I see people are really caring about what others say and whether it is 75 basis points hike or 100 basis points hike. On a credit standpoint, we see for some non-QM lenders and investors being concerned about higher LTVs, about low FICO scores, and I would expect in the coming months or so we might see credit to be tightened a little bit. But today we're in a situation when rates are going up and people are a little bit concerned about what's gonna happen over there with oil, gold, and Fed funds. What do you see over there on the rates and on the commodity prices?
Well, Alex, what I see in the Treasury markets is it's kind of a tug of war. Today, rates are about where they were, almost exactly where they were a week ago. There's been about a 20 basis point trading range, which is absolutely, I think 19 is the exact average weekly trading range, 50-week average. But what's happened are two things. We got an incredibly strong jobs report, 50% more non-farm payroll jobs were picked up than expected. And then 2 days later, we got a much worse than expected CPI report. The Fed funds futures right before the CPI number came out projected 7% chance of a 100 basis point rate hike. Right after the news came out, it was a 42% chance. Still the probabilities favor a 75 basis point hike. But my take is this, that if the Fed's ever gonna go big and do a 100 basis point rate hike, it would be a good time to do it now. A month from now, we get another jobs report. They could revise this number back down. It could be softer. There's a July 26th FOMC meeting, and then there's not another one until the end of September. So there are two more jobs reports. If the jobs market doesn't stay strong, they will have lost their chance to go big. We're already seeing the 4-week average of jobless claims drop. I think it's at its lowest level since December, or excuse me, its highest level since December, which is negative for the job market. In other markets, gold at a 1-year low, crude oil traded at 90. It was at 114 3 weeks ago. Those numbers don't suggest the worry of inflation is any greater than the worry of an economic problem. The US dollar is at a 20-year high. The yield curve is still inverted. So I think, again, a tug of war. I think you got a lot of players who are worried about nothing but inflation. I think you got another half of them that are worried about economic strength. And what I see until that's determined is a trading range. And the trading range we've been in, I think, may hold for the next month or so, but basically 3.5 to 2 3/4.
And I definitely agree on that point on the job claims, because right now, if you look at any news, if you talk to banks, if you talk to mortgage companies, with rates going higher, we see a lot of financial specialists are losing their jobs. So that number may be definitely revised. I can't agree more on that. On your experience, how long the inverted yield curve may stay on the market?
If I've got charts that go back about 40 years. I mean, we can go back into the 1980s. I want to say by memory, there's about 4 major troughs where the yield curve got inverted. They don't appear to last long when you look at a chart going back 40 years, but in reality, they lasted for 1 to 2 years while it was flat to inverted. And then they seem to come away extremely fast. We're pretty much a year into this curve being flat to inverted. So I think we're probably close to it turning.
Okay, and what are we expecting to see next week for the economic numbers?
Economic numbers, I think there's a whole lot of news coming out. I think the most important news is retail sales, at least the headline number. And then there's a lot of housing numbers that we're going to be faced with next week. So we may not get a whole lot of economic news per se, but we're going to know a lot more about the housing market.
And Fed's meeting is what day?
July 26th, this FOMC meeting. The next one's not until around September 20th.
Perfect. So we'll be looking to FOMC meeting and housing numbers. Thank you, everyone. It was Alex Suslov, Head of Capital Markets at AD Mortgage, and Billy Abrams, CEO of ADM Securities, with you for our weekly digest. Stay tuned.
Thank you, everybody. Thanks, Alex.
Thank you, Billy.